Hey traders, this is Christian from Tribeca Trade Group, and this is your weekend video, getting you ready for next week. So we're going to cover a lot of things. We're going to cover all the bases in this video. I'm going to try to talk as fast as I can because I want to get through as many subjects. Some of the things that I look at, which can completely change from week to week. But I want to talk about the major themes. Obviously we're living in a very headline driven environment, and the market is really reacting to headlines. So we're going to talk about the kind of the good and the bad, and positioning, as well as what is confirmation. I know a lot of people are talking about that. You have to wait for confirmation. What exactly does that mean? I'm going to talk a lot about option flow from last week, and why option flow can be very good in some markets, and really not that great in other markets to really pay attention to. So, I'll start off with, you've got, my Twitter page up in front of me, Tribeca Trade Group. So what I do, if you like the type of analysis that I put out on a week-to-week basis, this is basically just the tip of the iceberg from what I do in the trading room. So, you can sign up on our website, TribecaTradeGroup.com. And right now I'm giving just basically 1 week for $1 a day, so $7. And you could check us out for basically cost of nothing. Just it has to be some cost for me because I do set you up with all of our systems, which does take a lot of time and effort. But yeah, we offer an all-day trading room where I go over as many details as I can about the day, positioning, some strategy for the day, and then of course we go over all the option activity real time. All right, so I'm going to save the option activity kind of towards the end of the video because I do think it's kind of secondary right now. Going over option activity again, in low volatility environments, is great, right? Is a great indicator of where people are nibbling, where people are, taking shots and putting on decent trades in individual names when it's a stock pickers market. But right now, it's not a stock pickers market. Volatility is high. Right now, it is, and what I'll kind of start out with saying here is you always want to go where there's more opportunity and where it's easy to trade. Right now, so this is the JCJ index. This is the implied correlations. I like to look at this every now and then when it's really meaningful. I don't look at this day to day, but really when it's something meaningful is going on. So implied correlations have been picking up. So what does that mean? I know some people just like to tweet things out and they don't really explain what that means. It means when implied correlations are moving up within the S&P, it means that stocks are they're all moving together. And that's very, you don't really have to need this. You don't need this chart to kind of tell you that. Just looking at the VIX, right? When the VIX gets above, I like to kind of say around that 18 range. I know a lot of people are looking at the VIX over 20, but once we start to get over, especially over 18, all stocks begin to move more or less more together than they do separately, right? When the VIX is around 15 and below, which we saw for the greater part of 2007 and 17, it becomes a stock pickers market, right? There's the volatility is low and stocks really begin to separate from one another, and there's good opportunities in stock picking. Right now, unfortunately, what I wish for is not what we have right now, and we have more or less a market where stocks are moving together right now. So how can you take advantage of that? How can you take advantage of stocks moving together? You don't have to get fancy. To make money right now, just trading the indices, right? I've joked around before in previous videos where I talk about how I always get all these advertisements to be a futures trader and to trade S&P futures. And whenever, for the most part, seeing those advertisements in 2017, it was like a big head scratcher. Obviously, the guys who are sending out these advertisements, they're probably not very experienced traders, because you don't want to be trading S&P futures when it's a stock picker's market, right? You want to be doing it now. To tell you the truth, you want to be looking at, and again, it doesn't mean you have to become an S&P futures trader. It just means that when things are moving, when all stocks move together, you could just be trading the indices. And let's face it, if you're trading either futures or if you're trading options, just trading options in the indices are a lot easier to do. So you don't have to find the exact mover when we have markets like this. All right, so that's one of the first things that I always like to cover is what market are you in right now? So I think you can kind of switch your focus a little bit if you're doing day trading. And that's basically I like to speak about what I do and what I trade. So I like to kick around index futures when the volatility is higher. There's a lot more I think alpha generated in doing that. And again, I'm talking about day trades. I'm not talking about swing trades or anything like that. But again, I think very seldom, you know, people send out these advertisements and so forth, and they never really talk about when the optimal time is to either be a single stock trader or to be an index trader. So I think that's point number one, and that kind of just goes into why I think it's right now looking at single stock option flow is probably not the best is not the best thing right now. Now it's still very good for sentiment, but I'm talking about actually trading, right, and actually picking individual names and so forth. And I think if we go to Friday's activity in the market, which I will bring up now, one thing that you could look at in the last couple weeks is we really have some whipsaw action. So you have to ask yourself, is it going to be easier in days like this if you are trading a lot more short term? Is it easier to trade, to get in and out of options in single names or the indices? I think right now until this dies down, until volatility dies down, it's a lot easier to get in and out of Qs, SPYs, IWM. All right. So again, if that trading is not for you, and if you're not accustomed to that, you obviously do not have to try to learn, a whole new type of trading strategy, and this is really not the right time to be learning how to trade index futures, but it's something that we go over in the trading room, and something that an area that I like to provide a lot of examples, as I'm doing it, right? So the other thing, if you're not that type of a trader, if you're more of a swing trader, it's then this market may not be for you right now, until we really kind of get out of this this volatility. So I'm not going to rehash all of last week. I know there's plenty of other people who send out videos and what they like to do is just rehash what you should have done hindsight, and I don't do that. So let's talk about. Let's talk a little bit. So I mentioned, the fact of day trading versus swing trading. I think it's also right now you could talk a lot about trade versus investment. What is a trade versus an investment? Right now, I think what has been advantageous is to get into some positions maybe overnight when we really get oversold in the short term, and then peel out of them in the beginning of the day. That's a trade that we were doing a lot last week. I think that's going to continue to work. And you have to be comfortable with that type of risk where you put on a trade right at the end of the day and you take it off right in the beginning of the day. We did that a couple times last week. Right now, I think day trading and that type of trading, very short term, is where you want to be. I think swing trading is just going to be a lot harder. I did put on a couple positions last week, but I really dialed down the size. And I'll give you some examples. I went into a couple what I call limited risk reversals, and I have a video that I sent out. I think that was on Wednesday of last week. You could certainly just go through my Twitter feed, and you can find that video where I talked about trading options in a higher volatility area. And literally, I put on trades where all I could lose is $500 a piece. So I'm really defining my risk, and those are in the form of just one lots, right? So like I did a one lot in Apple, I did a one lot in Ross Stores, I did a one lot and a couple other names as well. So I'm not going to rehash all those trades last week. But those I know, those I want to actually hold for, a couple weeks, but I'm going in very, very small size. I'm not committing a lot of capital. And I think really that's the right strategy for me. And I will tell you in this video again, this whole video is for information purposes only. I'm not giving any recommendations. I can't do that or advice. So this video is completely for informational purposes only, and I talk about what I do, and some of the things that I look for. But right now, I think holding higher levels of cash. Until we get some confirmation. So that's the next subject that I want to get into. You hear that all the time. What is confirmation? Well, what I use, so I can't put that in terms of what other people are talking about. But what I mean when I see confirmation is kind of looking at key levels of support. For one, on the long term. So right now we've got, of course, the 200-day moving average, which everybody is talking about, and you hear that nonstop. Oh, the 200-day moving average, the 200-day moving average. Yes, it's very important. Why is it so important? Because it really classifies something as an uptrend or a downtrend. It's just really good for that. So, you could some people like to draw the line in the sand and say, hey, if we cross the 200-day moving average, we're no longer in an uptrend, we're in a downtrend now. And who knows how long these trends will last? But clearly, once you break it, things can now be categorized differently than what they've been, over this whole time frame and going back a little bit further. I'm not going to go back and say, I know there's a lot of people as well who talk about, oh my God, this is the last time since X, when we went below the 200-day moving average. I don't really care. I care what's going on now. So, it doesn't really make a difference the last time that we crossed the 200-day moving average. But if we do cross below it, you are crossing a boundary and we're now in a downtrend, and you have to respect that. All right, so that's confirmation to the downside to see if the uptrend is going to be held. What I really look for, when we have days like we saw last week, is I've got this blue line on my charts. That's basically everything I have, and this is one thing I will say that you should do. Anything that you have on your charts, you should be able to really rationalize why it's on your chart and why you have that on your chart. Some people like to throw a whole bunch of indicators on their charts, and I think really novice traders will throw as many things as possible on their charts, just thinking that they've got all these indicators. Sometimes that will confuse the hell out of you and you can't make a decision. So you really only want to put these things on your charts that are meaningful to you and will help you make a decision, not just because they're pretty and they look nice. So one of the things, I'm really going off on tangents on this video, but it is what it is. So I've got the 20-period moving average on here. That really helps to tell me whether or not, I've talked about the 200-day moving average as a long-term trend line, right? If we're in a long-term uptrend or downtrend. The 20-day helps me determine if we're in a short-term uptrend or downtrend. Notice the one takeaway from last week is, we got this nice bounce in the beginning of the week. Monday was horrible. First of the month flows. Really, there was a lot of selling that was going on the first of the month, or the second, right? The first was on the weekend, so the second. And then we had a nice bounce, which was great, right? But the bounce ran out of steam. Where did it run out of steam? At the 20-day moving average, right? So we weren't able to really get out of this. Sideways to downish action. And in fact, if you go through some of these charts one by one, sectors, right? So I'll go into, what do I want to go into first? So I think I'm done with this chart. If you go into SPX, and if you do IMAP, which will show you the weights per sector, right? So each one of these, and I'm not going to go through every one of these charts. I did this in the trading room. I think on Thursday or Friday we did this. But you want to always start with your biggest weight. So that is the XLK. That's technology. Basically, all these sectors. If you go through technology, if you go through healthcare, if you go through financials, none of them are in above the short term. Uh, the short they're all in downtrends in the short term. Again, 20 period exponential moving average is the blue line, right? The price action, I think we could all agree on that. We are under the 20 period exponential moving average, which again it gives me a good sense of uptrend or downtrend, and we're below. So short term downtrend, long term still hanging on to the uptrend. So confirmation, going back to the original question, what is confirmation that some of the volatility, short-term volatility, is over with? I look at a couple things. I look at that 20 period exponential moving average, and until we get back above that, we're in a short-term downtrend. And that goes, with basically all of the major sectors, all of these sectors that I just pulled up here. Financials, healthcare, industrials, trust me, I went through all these. Consumer discretionary, except for just a couple. Materials are in a downtrend. The only ones right now are a couple of the defensives, right? The utilities, which has just been kind of sitting here and grinding higher, which I don't see a lot of alpha right now in trading utilities. Sure, they are grinding higher, but it just doesn't look like they've got major momentum. But they're sitting above the 20-day moving average. I think REITs are also doing the same thing. So if you go to IYR, they're just barely sitting above the 20-day moving average. I think energy is right there. If you go to XLE, probably closed below that 20 period moving average, also below the 200-day moving average. All right, so that's just kind of what I talk about with confirmation. Also the VIX, again, it continues to be and has been a must watch. I think on Wednesday or on Thursday we almost broke into a downtrend again. So this has been in an uptrend, right? Price is above, all the moving averages, and has been. We've flirted with this 50-day moving average. Notice you have the, so it is what it is. You got the 50-day rising, 50-day moving average is rising, right? So there's no breakdown in this. We kind of had maybe a false break here on Thursday, which I think got a lot of traders, including myself, excited. It's like, hey, is this VIX finally going to break the 50-day moving average, similar to what it did here, and then it just regained it right back. So what I'm getting at is we have no confirmation. We have no confirmation that that this is subsiding. So what does that lead to? Just positioning lighter until you've got that confirmation. Otherwise, you're just kind of taking shots, right? You're doing more gambling, I think, than anything else. Without that confirmation and without a firm level to trade against, you're just kind of taking shots at different things. Now, again, I did that last week. I took some shots and some things last week, but I'm really doing it on a very light risk basis until I get that confirmation, and then I'll go back and then I'll go in a little bit further. But that's all about trading, right? I mean, the other thing, it's a little bit of a double-edged sword, right? So if you're going to take some shots on things, which I know people want to do, right? People think, hey, which I think is also like not a bad frame of mind to say, where would you rather be buying, at the tippy top, or really after a major move, a major correction. You kind of want to be adding risk after a major correction. But really where I want to be adding a lot more risk is once there's confirmation. So there is not. We have not gotten that confirmation yet. So again, repeating myself, but you have to position, in my opinion, I have to position lighter until I get that confirmation. All right, so that's kind of where things are at right now. We know that we're in a very headline-driven market, and the market is whenever the president tweets something out, or whenever there's a big headline, the market is really reacting to that right now. All right, so so that's basically what I've discussed so far. We're right at that verge of the 200-day moving average. You have to ask yourself now, and if you haven't done this already, you should be thinking about this. You should be thinking about having a plan for any market outcome. What are you going to do? You don't want to be thinking about that as it happens, because what happens when you're thinking about that as it happens, your emotions are higher than normal. When if we really like on Friday, for example, right? When you see the market just getting pummeled and taking a big leg lower. By the way, just a couple really good indicators that we saw on Friday. Again, this is all hindsight, so I didn't do this, which is it's fine. It's fine, but the indicators work very well, right? This is the bottom of value. Look at this. So, trading with the value areas has been exceptional. You just have to actually honor them and be very objective and not trade the way that you want things to go and trade them actually. But this is what happened. Obviously the market was lower all pre-market. We had the jobs data. We rallied at the open, but we rallied right into resistance. So this was your uh-oh moment that we could not get into value. We did a little bit of rallying in the first 15-20 minutes. Same exact thing for NASDAQ. Same exact story. We hit that bottom of value, and we hit that bottom of value, and that was it for NASDAQ. Notice there was a couple levels that we took out. If you go to the 1 hour, the bottom of value for the 1 hour also acts as pretty good support. I sent this out, and then I kind of looked stupid because we went right through it. But I was talking about this, and I'll show you in Qs because the Qs is what I actually tweeted out. But I said, hey, watch this level of support, which I think was 157. 156.88 was that level that I tweeted out. So we did break through it, and then what was support becomes resistance. Notice that we're going to start the week in value for next week. So that's something that you have to pay attention to. Again, the 1 hour bar for the value area is really good in my opinion. But if you go back to NASDAQ, which obviously you get a little bit more, notice that we did come back into value. But nevertheless, this is now old. This is last week's value area. This is going to be this week's value area. So we are going to start the week, looks like inside value. Let's just see what it is for IWM. IWM, we're also going to start right smack in the middle of the value area. So pretty interesting. We'll see what happens with futures, but it looks like all three of the major indices for the week are going to start inside value, provided any gap, but basically I'll say this from where we closed. All right, so let me go back to my initial, what I was talking about initially is that you don't want to start making a plan when this is going on. Right? This is not when you want to start to think about what am I going to do? Because again, your emotions are running higher than normal. So you want to go back to this daily chart and talk about what are you going to do if we break down, if we break the 200-day moving average, right? My thought is, and I'm hanging on to some things by the last thread, and if we break the 200-day moving average, I'll get out of them. That's all there is to really say, because I'm not going to sit with things once they get below the 200-day moving average. I'll wait for confirmation. Right now, I'm basically holding some things, especially in my cash trend portfolio. Right, I'm holding things, and if they do break, the S&P breaks the 200-day moving average as well as the 200-day moving average for each investment I've got on. You got to exit, and that's not a problem. I think a lot of times. Retail investors, a lot of times they just don't want to do that. They're afraid that they're going to admit that they're wrong, and you got to get over that. There's going to be plenty of opportunities to get back in. So let me get to the next subject, and I'll talk about that. If you do end up selling and going more into cash, just as long as you're watching things like a hawk, you're going to be able to get back in, and you're not going to miss much, right? But we don't know what's going to happen if we start to really break, and nobody does, right? All right. So one thing I would say, one of the big themes that I saw last week. Now, if you're watching this video, I will tell you some of the information that I'm going to go over you will see people tweeting out probably about 3 to 5 days later after I do. Specifically fund flows, right? You see people tweeting now about outflows from a report that was issued, that is looking at data from 3 to 4 days ago. I actually look at this stuff and I tweet it out the next day afterwards so that you have the data fresh. So people are talking about big outflows. That happened 2 weeks ago. That did not happen last week. And I'll show you the data so that you could see this. But if we go to my spreadsheet, which has all the fund flows, you could see that total equity outflows, they were $7 billion last week, total for equity. But I know people are tweeting about like 13 and $15 billion outflows. That didn't happen last week. And the majority of the $7 billion outflows that happened were in the beginning of last week. So let me just walk you through a couple things. The major theme the last 2 weeks that I've been talking about is the money. So what is this chart, by the way? This is SHV. What the hell is SHV? You're probably asking yourself if you haven't heard me talk about this before. It's basically a short-term cash equivalent. It's I think it's 1 to 3 year treasuries. It's cash. People use this, or funds use this when they don't want to be in equities anymore. They'll go into short-term treasuries. Look at what's happening here the last couple weeks. Just a major move into this group. So the previous week, SHV had the biggest inflow of any ETF out there, and I think that was in my newsletter last week, my fund flow report. It was last week, $1.3 billion is what SHV saw. This week, a little bit lighter than that, but still. Oops. $915 million. So right now, these are the areas that are seeing the biggest inflows. People are not really buying the dip. They are not going into equities just a little bit. We saw it a little bit towards the end of last week. There was one day, I think, where there was $3 or $4 billion going into equity ETFs. But for the most part, they're not jumping in with 2 feet. What is seeing inflows is these cash type equivalents. You could see, so I have this sorted by the 5-day. I will go and look at the 1 day in just a second because there's a couple things that were interesting here. But look at, there's another one, SHY. This is also, I think, 1 to 3 year treasuries, $450 million of inflows going into this one. There's one more in here as well, which I can't find, but there's another one. I can't find it, but there was another one that saw about $100 million of inflows. It's right in my report. Mint saw $185 million of inflows. All right, so that's kind of, and I want to talk about that just for a second, and then I'll go over some further inflows. So I have a chart up someplace. Here it is. I have a chart up someplace giving you a sense of every time. Now, this has happened before. It hasn't happened in a long time, but it's happened before where investors will really run into these cash type ETFs, SHV, BSV, Mint. So take a look at the last few times over the last. This is a 5-year chart. The orange line is SHV. This is the outstanding shares, not the price action, with the SPY. So what I'm trying to show here is when investors run into these funds, into cash, when it's happened before previously with what the S&P has done. All right, so let's look at this one first. This is the red line is shy. So I just wanted to put both lines in here. But you could see, like, there's been, clearly a couple market dips. And usually they time it pretty poorly, right? Big inflow going into cash after the market correction, after it's already happened. Here they started to go in, but again, they were late. They didn't put the cash in here. They're putting the cash, they're reacting to the price, and they're saying, oh my God, get me out. Right? So probably not the best thing to do. Same thing here. And again, these are market corrections. 2007, 2008 was different, right? You can't really use that analysis. So what I'm talking about is just straight market corrections. You know, this was a bit more of a market correction, you know, back here. Twice in 2015 and 2016. So a little bit of cash ran in here, and then people deployed some of that cash. Notice the cash levels didn't drop all the way down, but people got out, redeployed cash right at the wrong time, and then they got out of cash again here. Or excuse me, they got out of the market, got into cash here. Same thing in this fund as well, right? Exactly at the wrong time. And then the market recovered, and then that cash started to be redeployed, right? Cash balances go down, money goes back into the market goes up, so on and so forth. So to me, it seems like the same thing's going on. Now, this has been a little bit bigger of people getting into this fund, right? This looks a little bit different to me. So people are really running scared, I would say, right now. And we have to see what's going to happen with the 200-day moving average. This could be another place where we could rebound with these excessively higher than normal cash balances in these particular funds, and it could be a great buying opportunity. But we could also do one of these. You know, you go back to 2000, and you know, so you have to put this. You do have to think about this. You know, you can't just ignore this completely. So if you go back to 2007, or let's do 2006, just so we can see the pattern before, and then what, 2010 maybe? Right? We broke the 200-day moving average once back here. We broke it again. We kind of retested a little bit, and then we kind of fell apart. Retested here, failed, and then you know what happened here. If you were trading like I was back here, you know, these are the days where I used to trade institutional funds, where I made markets for the biggest hedge funds out there. I worked on an ETF desk, probably one of the most volatile areas that is around in these times when this happened. These were crazy days, and I could go on and on and on and about those stories, but I lived it. Not fun times to be trading. Huge volatile times. I sent out a tweet about this the other night. Times where bathroom breaks were few and far between. You came in, you didn't really know what you were dealing with on a day-to-day basis. Sometimes you came in and people were giving hugs to each other, not because they were happy, because they were being asked to leave. And you also were worrying about what bank was going to fail that day. You were also wondering if you had funding as a bank. So we are not even close to what we're dealing with in this market. And what I said to somebody, I think Thursday night when I was tweeting, is right now we have luxury problems. Right? We don't have big problems right now. But you know, you want to be aware of when we do break the 200-day moving average. So let's not over dramatize. Everybody always wants to go, once we have a little bit of a market pullback, you start seeing the flying tweets about 1987 and every market correction. So let's not, and you know, it's funny because sometimes I tweet things out and people have it's almost like they want to see 1987 again. Like it's just going to get worse. I don't know why people want to, like, why do people want to have that doomsday? And I don't know why there's so much anger that people want to see this again. I don't, you know, oh, it's going to get so much worse. It's like, okay, it could get worse. There's no doubt it could be worse, and you have to have a plan for it. But I'm not going to speculate. It's nonsense to do that. So anyway, so again, going back to my analysis, the reason why I'm showing you 2006 to 2009 is because I'm showing you a 5-year chart of cash balances and what has happened previously, that it's been a pretty good buying opportunity when these cash balances move up. But it doesn't mean that this is 100% going to happen, that we're going to rally off the 200-day moving average. So again, confirmation, wait for the 20-day moving average to be reclaimed, wait for the VIX to start to move down. All right, so that's a lot that I've went through, and I haven't even talked about the option activity. Okay, so let's start going through a couple trades from last week. Again, I am not going to go through 30 different trades, which I know people like to tweet out every time there's a call buyer in something. I try not to do that. Those who tweet out 30 different names a day that saw a call buyer, whether it's $100,000 in notional or $5,000 in notional, people will tweet out the, it makes absolutely no sense to me. There's a big difference between somebody who buys a call option and they're putting 100 or 500,000 down versus somebody who's taking a $10,000 who's buying something for $10,000, right? Does that make sense? Like, I hope that makes sense to you guys. So that's why I don't tweet every single time that there's a call buyer in something. That's, in my opinion, nonsense. So let me go through a couple trades that I think are interesting. And I'm not going to go over my, what I do is for Tribeca Trade Group members, I will have 5 trade ideas for next week with charts and levels to watch, levels where they won't work, levels where they will work. But I'm not going to go through those 5 different ideas right now. Those are for members. This is a free video that I'm sending out. All right, so let's start with Friday's activity first. There was a couple interesting trades. I would say one of the themes from last week was there was a lot of retail buying that was going on. There was a lot of buying in some names that have been beaten up. So for example, I'll start with this one. So again, trade versus investment. Look at this chart of Ulta. If I can bring it up, it's horrible. It is a horrible looking chart. So this is not like and I'm still waiting for this to come up. But there we go. But look at the price. Look at the trend. What is the stock in? It's in a downtrend. So it broke the 200-day moving average here. Big uptrend, broke the 200-day moving average. And again, this is a good, going back to the S&P, breaking the 200-day moving average. And good night. Right? So don't buy a dip here. So anyway, we saw a nice call buyer here. So it's a trade. We saw this on Thursday. Friday, the thing shot up, was up like 3%. That's your trade. Boom, get out. Could it go higher? Could it get outside of value? Sure. But I don't view any of these, Ulta. And I'll show you the trade that we saw. Oh, whoops, forgot to do 5-day. Now, this was a nice looking trade, just 500 contracts, but again, $240,000. So I'm not going to talk about the ones that were $10,000. This was a $240,000 trade. Yeah, somebody buying the dip in this one. And we saw this similar action in about 5 or 6 different retail names, right? There was a couple other ones. Restoration Hardware saw one. Restoration Hardware is a really difficult name to trade in options. The options are just too wide. But if you like a stock name, this is a little bit different. You got the 50-day moving average. A few other names. Ross Stores saw some calls. I like this chart very much. I did put on a trade last week. However, it kind of got smoked versus the, like everything did. So what I would watch at this point for this name is for it to reclaim. Again, you're not missing much. So a lot of what the names that I'm going through are not necessarily names like you want to jump into on Monday, right? You want to write these names down in your notebook, and you want to start to put alerts in your trading system for the levels that you think it's interesting. For me, I would put an alert right around, a little bit north of 78, maybe 78.5, maybe even 79, and wait for this to reclaim the 50-day moving average. And again, I always like it when the moving averages line up with the value areas. Here you got both. You got the 50-day moving average and the top of value. ILG was another one. Kind of, this is not retail, but you can see I've got a trend. So I've already done quite a bit of analysis on this one. It's one of those names, like a lot of the, almost every name has made a peak of 34, a high of 34.92, has come back in. It's come back into support. It has not reclaimed, enough, I think. But keep it in the back of your mind. They're accumulating, right? So again, this is what I'm looking for in option activity, where somebody is repetitively accumulating stock into weakness. June, 34 calls. And the further they go out, the better, in my opinion, right? Because they know that we're dealing with a whole bunch of volatility, and nobody knows when this volatility is, what day it's going to end. But they're probably thinking, and I don't know, but I'm in trying to think how they're thinking, that probably sooner or later this volatility is going to be over with. Or everything falls further apart. Notice that I've also got this stock has made these patterns before, where it consolidates and then breaks out, consolidates, breaks out. So we're in probably another consolidation. You could probably draw a steeper trend line here. So for me, oops, hello. That's probably not perfect, but I'll make that another blue dotted line. Wait for it to get a little bit higher for that confirmation. Just like we talked about with the 20-day moving average, notice it's below the 20 and the 50. Or, again, maybe starting like a tiny position here. Something that you're not going to get upset about if it manages to crater and go down further. So if you want to start your position here and then wait for that confirmation, and then, so let's say your average trade size is $1,000 for round number purposes. Maybe you buy 10%, maybe you buy $100 here. And then once we get a little bit higher for that confirmation, then you add a bigger position, right? That's generally how traders, technical traders operate. All right, a few other names that we saw on Friday. Alcoa, there was, again, this is maybe something more for a trade, but they're buying a whole bunch. So I would say keep this name on your watch list for next week. This was a name that was up on Friday too. So that's another takeaway is somebody mentioned to me, and I love when people respond back to me on Twitter with their ideas, but they're like, hey, this name was actually up. That's good relative strength. And I was like, you're damn right, that's good relative strength. Yeah, I mean, that's very good, all joking aside. Names that outperform in a down market, there's something to be said for that. That's usually a pretty good sign, in my opinion. All right, so notice it's above the 50-day moving average. And it's funny because this is like a name that's right in the crosshairs of the tariff junk. And it's doing okay. Deere was another name that we saw repeat call activity last week. So notice I'm not even showing you, like, again, the trades, in my opinion, I think a lot of, and I hate to say it like this, but it is what it is. I think a lot of beginner traders, they like to follow option activity because they think it's the holy grail. Let me break it to you. It's not. It just gives you an idea of where people are accumulating. It's not going to bail you out because they're not going to tell you whether they're hedging. They're not going to tell you what their whole position is. They're not going to tell you if they're going to be hedging, selling some stock versus the calls. Traders do that all the time. They will do that for example, right? If you buy call options, let's say going back to Friday, let's say you bought call options big on Friday, and the stock for whatever reason is up big on Monday morning. What institutional traders will do is they will sell the stock pre-market because to lock in the gain, and they'll figure out the right ratio to do that. They'll delta hedge. You're not going to see that. You're going to be looking at the call activity. So once they're delta hedged, right, their risk is neutral. So anyway, it's not, option flow is not the end all and be all. I get that all the time in the trading room too. They're like, well, the stock's down. Were there any puts? Does it really matter if there was puts bought? the 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 most important thing is the price action, not whether there's puts bought. So again, the option flow will give you an idea of sentiment and whether things are being accumulated, but stock goes down and goes up all the time. It doesn't need to have the call buying or the put buying to make it go up or to make it go down. If somebody has taught you that, they're teaching you incorrectly. That's just not. It just doesn't need to happen. All right. There's plenty of stocks that go up, and there's no call buying. So again, it's a great tool to use, but it's not the end all and be all. And it's a great indicator, just like anything else, just like an MACD indicator is. All right. Maxim. We've seen nothing but put buying in a lot of the semi names. This is one that has been very speculative in terms of being bought out or not. If that's what you're interested in, somebody did look like they bought some Maxim call options. Basically into the probably around the weakest part of the day on Friday. April 60 calls. Again, short dated stuff. So again, position sizing in this stuff. If you're going to play in this type of thing, are you going to put a normal position on in Maxim because somebody bought, $48,000? No, I wouldn't. Somebody's, it makes a big difference. Sometimes people don't associate how much risk that trade is, right? That's a very small trade. Is it aggressive? Is it interesting? Sure. But it's not something where I'm going to devote a huge amount of capital. Maybe I'll buy it up to a 5 lot. That's it. So again, small stuff. Don't put big. My opinion, again, I can't. This is not recommending anything, but I would not put any large amount of money into, something that speculative. But maybe roll the dice and have a small piece and put in what you're willing to risk. I say this a lot of times with trades and in options. That's the other thing right now is you have to think about that. As volatile as this market is, only put in. You have to think about the risk first. Only put in what you are willing to lose, and that's will kind of bail you out of some situations, I think. Interesting, Baba. I do have to check the open interest on this, but Baba, we've seen a lot of put buying the last 2 weeks. I don't know exactly why, but on Friday we saw the first indicator of maybe a little bit of call buying going into some weakness. These were the July 210 calls. So $1.45 million. Again, it does have open interest, so I need to check that to see if they're adding into weakness. There was also a nice trade that went out in Baba. And again, there's been a lot of put buying, mostly short dated put buying in Baba. So, you have to be aware of that. Yeah, here's January calls. This also has open interest, right, of 9,000. So I'll have to check this one as well. January 230 calls in Baba. Gold. There's a decent amount of gold buying. Also, gold saw inflows last week. How much inflows did we see in gold? Gold has been another tough trade. It's been so range bound. There it is, right on the top of the spreadsheet. That saw about $600 million of inflows, and that's been seeing inflows, right? If we go over here, I will talk about Europe in just a second, and I'll talk a little bit more about. I know this has been a long video, but again, there's a lot to talk about, and I hope you appreciate that. That we're going through a lot of different subjects here and a lot of information. Gold. It's been being accumulated, but again, this is not huge. There was a big inflow here. So again, I think you have to wait for this to kind of get outside of this. It's been making, in the short term, it's been making lower highs and lower low, a little bit lower lows. So again, buying gold here, I don't really see the point. It looks like chop suey. I would wait for a break around 129. Again, I think so many people, they want to get in thinking that they're making a prediction, and they know. I don't know whether gold's going to go higher here. I would wait for it to start moving rather than to mess with this. Where you're going to go long here and it breaks. It's just so it's very, very choppy, and I see no reason to waste capital on this until it starts to actually trend. Right? Is it trending here? No, it's going sideways. If this thing starts to clear, I think it's got a lot of possibilities for this to get higher. So I would be really interested, but I'm willing to miss $2 in GLD for the confirmation that it's going to push higher. Again, I'm not going to get in up here. We'll go back to this chart. Let's say it does move, right? Let's say it starts to move. I'm not going to get in at 135 once it's already up here, but I would rather wait until maybe this 129, and then you still got the $5, and then you could start to maybe shoot for up here even. But again, too early to me. But yeah, they are positioning a little bit. Did see gold do up a couple times. This July 128 was a nice trade. So I talked about Deere, which we've seen call buying in a couple times this last week. Again, a name that's right in the middle of the crosshairs, I would call it. I don't have anything on in this one. I think this is a little bit too risky for me. I think there's better trades out there. I would rather be in some areas of the market that are not going to be so sensitive to the headlines, right? You know what's going to happen. If there's another big tweet, like if China responds with a big tariffs, what's the first thing that's going to go down? Probably Boeing, Caterpillar, and Deere. Now, if this ends up being another one of the Trump's bark is bigger than his bite, which, by the way, has been the pattern, then something like Deere and Caterpillar will probably go up higher pretty quickly. So you have to think about these scenarios, and you have to think about the last year, what we know about Trump. Is he kind of walking on the tightrope right now of possibly upsetting and really getting people, as well as countries, getting them very angry, and really teetering on the side of getting people angry at America? Yes. So that is what concerns me a lot. But what we do know over the last year is his bark has been a lot worse than his bite, in terms of everything he's been saying and then versus actually doing. One other trade that we saw last week too was, and there was a little bit of call buying in some of the steel names. So and here's another point about option activity. Sometimes you can get in a lot cheaper. They bought these for 98 cents, really late in the day on Thursday, about a minute before the close. Now these are now marking. They bought these for 98 cents. You could probably get in for about 50 cents. So you could get in basically half. And again, right? If going back to what I was saying about option activity, if they were so right, why didn't the price go up? So again, you have to be a little bit strategic in these things and realize that the people are trading these options are oftentimes wrong, or they're not picking the right price to put these trades on. So again, the more that you could come to this conclusion, I think, again, if hedge funds, who are the majority of the guys who are trading this stuff, if they were awesome, then they would be outperforming the S&P. The majority of them are not outperforming the S&P. So if you're following option activity, you want to keep that in mind. So you want to trade these with your own system, because a lot of these guys are not performing the S&P. All right. So again, I'm talking about a lot of things that probably a lot of guys who purely follow option activity or a lot of other trading rooms don't talk about. So we covered a couple things here. We covered there was also some home building buying. I would watch that group next week as well. So just a couple different areas, right? I didn't go through a whole bunch of charts, but I think McDonald's is kind of interesting to me. And again, kind of failed. I got really excited in this name towards the end of last week. We did see some call buying in this name. So left, kind of to me looks like an inverted head and shoulders. Left shoulder, head, right shoulder, back to the neckline. Now, we've seen a lot of head and shoulders actually turn out to be not head and shoulders patterns. Same thing with inverted head and shoulders. What I would watch for in Mickey D's is for a move above 162. But again, these restaurants, a lot of them saw call buying. Eat is another one. Brinker. So some of these, as I mentioned one day in, I know I mentioned this in the trading room, you have to cover some of these charts. You actually want to cover up the symbol and just look at the technicals. Look at this Brinker. This to me looks like, after a big downtrend is now above the 200-day moving average. Just had an MACD crossover. This was another name that was strong on Friday, up 10 basis points. So a little bit different. Another name hasn't seen option activity, but I still like, is Cake. So again, you don't need option activity, right, for a stock to go up. Look at what this has been doing, 47 up to 52. It looks pretty interesting. Again, look at the outperformance on a really on a nasty day, up 60 basis points. A couple of home builders, DHI. We spent a lot of time on DHI. A lot of call buying out in January. You could certainly go through my Twitter page, look at C. Fromhertz and DHI, and look at all the tweets that I've been talking about this one. But this name exploded higher. I covered this in previous videos. But hey, you got to check back, a breakout of the value area and a check back. So it could be an area, if you missed this the last couple days, you've got an opportunity here to go long the name versus support. And again, if it fails the 50-day and top of value, get out, in my opinion. All right. Couple other names to go through. Yeah, this is the start of the week. Macy's was another name, but again, very short-dated stuff. I just wanted to talk about, I'm bringing up a couple names like Macy's and Under Armour. But I think those trades are basically over because they're only buying short-term calls. But again, analyze each situation on its own. I already covered ILG a couple times. Twilio, I think, is another interesting name. They're going out to January 2020 in Twilio. They've been buying some Sarepta calls, but that hasn't really worked. They bought a big block of Fez. So I want to talk about this. Let me just jump back to fund flows just for a minute, because there was a couple interesting things going on. Let me just bring up the like I said, I have this sorted for the 5-day. Let me sort this now by the 1-day, because there was a couple things as that's getting ready and sorting for me. A couple things in international land. What's been going on? So there was some decent outflows, not last week but the week before. There's actually some inflows going back into Japan, as well as going back into Latin America. So not all outflows. What has been seeing outflows is Europe. So if we go to the EZU, really, really extreme at this point outflows. And you could see this here. This is one of the biggest European ETFs. Nothing but outflows over since the beginning of March. Remember back here, big money going in to Europe. And they did pretty well with that. So must watch, I think, is EZU as well as the DAX. They bought those calls last week, but I think they got what they were looking for. That big order of Fez that went up, which is the Eurostock, which is another Eurostox ETF, and you can see what that looks like here. Right, outflows, but not as big as EZU. But by the way, the outflows for the last 5 weeks. So last week, by far and away, the biggest outflow is Europe, $762 million. What does this look like over the last 5 weeks? $3.9 billion. That's totaled in all the European ETFs. All right, so let me go over a couple, but I just wanted to make sure you saw that. I think that's also notable for the week. Maybe at some point that gets oversold or over unwound. A couple flows that I caught on Friday. IXN. This is global tech. A lot of it is U.S. tech. But still, I think notable. Somebody bought the dip last week, and that's why I'm showing it. Right? Not an ETF that gets... So again, I tend to look for, when I go over these fund flows, not so much SPY and Qs and XLF and XLK, but I like to look at really the smaller ETFs that people are allocating money to. It's a little bit different. Somebody is really doing the research and going into something different. So big inflow into that. About $140 million. Again, not as big as some of the unwinds. Like SPY had what last week? A $2 billion outflow. Oh, that was Friday. $5 billion outflow for the week. MCHI, a China ETF. Again, small. But somebody's buying a little bit. I like this ETF in terms of all the China ETFs. This is my favorite. Good combination of tech. So you can see inflow here. And then my favorite one for last week, next to favorite is small cap Japan. Japan's been seeing a lot of outflows the last couple weeks. Inflow, small cap Japan. Again, unusual. Big outflow here. Maybe they're putting that money back that they took out into the Japan ETF. So my favorite one for fund flows for Friday is Singapore. That's EWS. And probably, I think, the biggest inflow in 5 years into Singapore. Again, not a huge amount of money, but definitely interesting. Where's EWS? $78 million. That's 11% of the fund. So that's my favorite inflow from Friday. And notice, Cyril, I'll show you how you could kind of see this on Bloomberg. If you do EWS, equity IVAT, and I want a 3-day chart. Yeah, so you could see basically on Thursday. Look at the volume on Thursday. And then it kind of popped. So that's some accumulation into that. All right, so that's today's video. Again, I didn't spend that much time on option activity. I think the main takeaways from the option activity last week is there was some buying in some different groups. There was a lot of put buying in the semis. The semis are cold right now, right? It's almost like when you play a game of when you're a kid, you played this game when you covered your eyes and you said, is this hot or cold? Or you're trying to find something, and as you get closer, it's hot. Something's, maybe that's not the best analogy, but right now the semis are cold. They will come back into play, but right now. So if you're looking at some of these names and at various different semi names in the short term, you're cold. You're cold looking at these things. They are taking a breather right now. So look at some of the names that are where people are starting to accumulate, such as some of the small cap retail names. One of the things that I see that's in common with some of these areas and the home builders that we've seen some accumulation in last week, maybe a little small cap biotech too, is that they're a little bit sheltered from international, right? IWM is another area that I'm looking at a lot for day trades, because the smaller cap companies are not generating a lot of revenues overseas. It's just, for the most part, a little bit less than, the big large cap names. So that is something to focus on. All right, so that's it. I will be sending out for members some ideas to watch for next week, some levels. What I also do is provide a couple different contracts to possibly trade for them. This video has gone on for an hour, so thank you for watching it, and I hope you got something out of it. Visit tribecatradegroup.com to get that one week trial membership for $7. Thanks very much. Have a great day.